everybody, welcome back to the Everyday Growth Advisors live stream. It is Monday, the 22nd of February. My oh my, 22 days of February have passed. We are like 1/6 of the way through the year. How crazy is that? Oh my goodness, like, can't believe it. Pretty much like the freaking year is just gonna pass by in a blink of a second. I feel like January just started and now all of a sudden we're at the end of February. This is the last week of February, you guys, and it will also be a important week for the markets. I believe this week is OPEX, which means that all options, well, no, last week was OPEX, the third week, right? Yep, it was last week. The 19th was OPEX, so that's the week majority of options contracts expire at the same time. So that happened, and now this week we'll be having rebalancing of the portfolio that I'm doing, the 10K portfolio. I think some of the hedges are going to pay today, hopefully. We'll see how that happens. So market opens and we'll see how that goes. In the time being, we have a lot to go through today, but mostly we're hitting all the levels that we said we were gonna hit. I'll get to the technical breakdown in a second. Let's do the news first. As you guys know, I go through the news because the news ain't important, and we read the news for the entertainment. And when we read the news for the entertainment, we laugh at it because the news be trying to figure out what the market does, but the market does something anyway. And it's always fun to see them try and guess why the market's down, why the market's up. Literally, I feel like every single news outlet at any given time has 3 news articles that are ready to go. One that says stocks climb, another that says stocks tumble, and another that says stocks trade flat. And then they wake up in the morning, they put their finger in their mouth, they feel the energy in the air, and they say, which way are we gonna go today? And then they just press one button and choose one of the 3. Like, for example, today, bond yields climb as stocks slump, copper rallies, markets wrap. I swear it's the same headlines all the time. The boo headlines. You guys know what I'm saying. The boo headlines. So let's see here. Bitcoin falls most of the month. Yeah, okay, sure. According to all of my friends on Instagram, hashtag buy BTC, hashtag buy, I don't know, all the cryptocurrency names in one single hashtag is still very common. So yeah, I don't know why people are selling cryptos. They should be buying them at this price. Come on. You guys know better, right? When something is high, that's when you buy. When something is low, that's when you go, right? You don't buy when it's low and you sell when it's high. What do you mean? What do you guys mean? You mean you're supposed to sell here and buy here? What? No, you're supposed to buy here and then sell here. Buy high and sell low. That's how you make money, right? Sheesh. These people, some of them, really don't understand it. And then on top of that, the funny one was Elon Musk saying Bitcoin is a little better than cash. I am still trying to figure out what he means by this. I'm still trying to wrap my head around it. But, maybe one day I will try to figure out this guy. And then he said it's overpriced, and then the market sold off because Elon Musk dictates the price of Bitcoin, not market participants. It's getting a bit ridiculous now. It's getting just a slight bit ridiculous. If the whole world operates on the words of one guy, we're soon going to be in trouble. We are soon going to be in trouble. I don't care how smart somebody is, but if you follow blindly, you're bound to get hurt. You are bound to get hurt. Okay, so in news here, not really much except for the Facebook news, which was concerning. Facebook blocking out Australia and also, what was the other country? Europe? Was it Europe? I think it was Europe or Australia. They were blocking them out with the news outlets, something like that. And that was one that was it broke below this pennant here, so or we could just shift this trend line and make the pennant bigger. That's another option. You know, when everything fails, all you got to do is just do this. Just move this out, and then, you know, just draw a new one. You know, it's easy this way. You know, just adjust the trend lines. It's just much simpler. You know, like instead of like admitting defeat or something, you just, all you need to do is this. There you go. Ha! It's still in the trend. Ha ha! There we go. Facebook's still in the trend. Okay, we're back in there. All right, let's save this. I started. This is what majority of people do. Anyway, they had some TIF with the Australian government, and then also I think they're having some. Oh, Google too. It wasn't just Facebook. It was Google as well. They had some privacy issues, and then also something to do with the news outlets, which was interesting. So yeah, those were two things that I saw on the news that were the only two things that I would have read into. Other than that, everything else is, I don't, honestly, I think the person who's doing Bloomberg News for this like segment is, I'm not really sure what he's doing, but really not any that much interesting stuff here. Wall Street Journal is doing a much better job, to be honest. Okay, so stock futures drop, pointing to retreat in technology shares. Okay, and what else? What? You mean that's the headline? What do you mean? Yes, I know that's why the market went down, but why? Journalism has come to this. They just say what is happening. Like, they don't give you any insights anymore. Boeing can't catch a break. They have, again, I believe, suspended the use of some of their planes. Once again, another problemo for Boeing. They really can't catch a break. You know, it's really interesting. But we'll see what happens. Brexit isn't stopping borrowers finding cheap money in Europe. China online lending curbs to hit big tech firms. Gains in small stocks highlight investor exuberance. What? The gains in small stocks highlight the exuberance? Okay, all right. U.S. retirement crisis hits Black Americans. Okay. Texas blackout. Banks boosting Australian bank by up to 215 million. Interesting. Okay. I actually also wanted to see what BP is doing. Let's see. Okay, so FYI, I sold my position on Friday with BP, but I'm looking to get back in again on a possible dip. You know, into this region right here, the $22 region. If I can get a dip, I will get in. I like BP to the upside. It's a good, you know, eastern side, diversified oil exploration, oil play. Okay. I'm calling this one out on the live stream right now. So if you're here, you benefit. If you are not here, you don't benefit. But while you're here and you enjoy this live stream, make sure you smash the like button. If you can, take a second out of your day, hit the like, hit the subscribe. You know the vibes. Help me out a little bit, you know, because if you like the stream, then this stream gets, you know, shared with other people. And so if you can take a second out of your day, and all 70 of you who are here hit the like, then we may just have some special stuff that goes on the stream. But the lesser likes, then I'm not gonna hold any special things, you know. So show me that you love me. No, I'm just kidding. I'll still do special things for you guys. You know me. Okay, weekly webinar is up, FYI. You should watch it. I have also recorded the CCIV video. How I ended up getting 100 shares of how I will end up getting 100 shares of CCIV for free, which will be posted sometime tonight. Okay. So here you can go watch the weekly webinar, Sunday Prep, the new nominal, which is what I go through basically, you know, the projection for the week, etc., etc. 10 minutes, quick summary. I'm gonna make these weekly webinars super concise now, so that people don't have to sit 50 minutes through something. I'm gonna try and make it within 10 to 15 minutes every week, and I think that will do well, rather than it being a 30-40 minute video. Okay. Today we're going to go through two of the ARK funds, but first, before we do that, we're going to go through ARK's investment philosophy. I'll get to that in a second. Let's go through the rest of the live stream events, and then we will get to that. So news-wise, not really anything that's like exuberantly important. But Boeing recommended suspension of 777 airlines after United Airlines had a engine debris that was found, on the ground. And then another thing that's happening that you need to also keep track of, which the news is not reporting, is OPEC. So you guys remember how last year we had a demand problem that led to a oversupply? Okay, I think this year we might have the reverse situation happening if OPEC doesn't increase output. When we reopen, if OPEC doesn't increase supply, we're going to have a demand problem, and that's going to drive the price of oil up. Now, they may intentionally do this to make up for losses from last year, but I don't think it's legal, so I don't think they will. But it's just something that is, keep this in mind. I'm mentioning it now because I see kind of this situation brewing, and I can't confirm it right now because I don't have enough information. But what I do see is as demand starts to rebound, and if supply stays the same, then we're going to have, again, another problem where oil prices go the other way now. They start increasing because no supply, too much demand, prices of oil go up. Okay? So, and on top of this, you remember one thing? That the entire Texas shale oil supply, it's going to cause a depression on oil supply as well. Okay, remember that because the Permian Basin, which is one of the most biggest, and the Marcellus, all of those the shale basins that the U.S. extracts oil from using fracking, they were somewhat frozen during this past few weeks, and so no oil is being produced from America. Okay, so OPEC and the U.S. oil companies are seeing a rebound. Okay, but a very limited rebound in oil supply. All right, and this is gonna cause a possible oil price spike. Okay, now just looking at oil prices in general, let's actually have a look at it real quick. So, U.S. oil. I want to do this one. Oh, it's here. So you can see, we've been on a solid uptrend since February, okay? And now we're starting to peak into this, really interesting kind of a scenario where we may hit like $80, $80, $75. If this thing goes parabolic, that's what's about to happen, okay? Meanwhile, so the recovery has been obviously awesome, so we need to watch this closely. Okay, then what else? Biden to revise small business loans to reach smaller minority firms. That's another piece of news. Texas utilities can't stick customers with huge bills after the storm. That's regulators saying this, which would kind of suck for them. Yeah. Apart from that, there's the whole the whole Facebook and Google Australian thing, which is causing an issue, and that's what's we're focusing on that side. What else? Okay. Yeah. Okay, I don't think there was anything else that I wanted to mention about other companies. We do have a fair bit of companies reporting earnings today. Obviously, markets pretty red considering that we had a overnight sell-off in Asia. This was the sell-off that happened right here. We broke through the demand zone and we are consolidating below it. We'll see what happens throughout the day today. It's looking bearish right now, but once again, can't really predict this to the maximum here. We're just going to go with what the market action says, what the price action says as the market opens. In terms of earnings today, we have Berkshire Hathaway, Occidental Petroleum, O Realty Income for those dividend holders, Dish Networks, RCL, Diamondback, Marathon Oil. Yeah, those are all notable ones. This week we have notable news. For those part of the Discord community, I've put out the weekly report for you guys to go have a look at. What are the key sector rotations we're looking at for this week, etc., etc. And in terms of pre-market movers here, we'll ignore that. Palantir up 2%. Let's see, what else? Churchill Capital 16%. CCIV, which is really good for our sold puts so far. We inch closer and closer to a merger, and so I'm gonna probably end up getting these shares for free at some point. I just haven't. It's entirely up to me when I want to get the shares for free. So this is the benefit of it. Like I've already collected so much premium at this point where, you know, I'm gonna decide what I want for myself here, and so I'll wait. I'm gonna wait a while. You know, the more time that drains on, especially as we get into the the next two weeks or so, I'll have maximum theta burn on the contracts that I'm holding, and theta is gonna accelerate really nicely to burn off the remaining of these contracts that I have, which are already at about a average of 50% return, 53% to be specific, almost a $2,500 profit on these ones, which is a great kind of added benefit to this portfolio as we go into March. For March, I will be focusing mainly on selling premium and debit spreads. That is it. So yeah. Okay. Let's see. Okay, SPY here. American Airlines up 6%. And we have, apart from that, not really much else. Boeing's down 3% on the news. We'll see what else moves today based on pre-market movers here. NASDAQ wise, everything's red because tech sold off pretty bad. Baidu's down 3%. Definitely don't jump back into these because, you know, cheap can get cheaper. Remember that. Tesla's down 3%. I wouldn't recommend to try and call a bottom out here unless you have some really great crystal balls in your house for you to go and forecast the future. So stay vigilant on what's going on and act accordingly. However, if you have been holding hedges like us, then this is the time where you can possibly close them out and just grab some positions for the upside. But that will be later. Over on this side, Kohl's is up 9%. What else? American Airlines, yep, the same. And then biggest losers here, Boeing, Nectar, Atmos, TransDigm Group. Okay, great. All right, awesome. Let me see what the chat is saying, and then I'm going to get into ARK funds. Good morning. What's up, Seabass? How are you doing? What's up, Mark? Kyle, good morning. Keston, GS, what up, what up? Santosh, Susie, Stefano, Andrew, Landon, Jianlong, what's up? Sabli, and Monk. What is that noise? What noise? Is there a noise? What noise? Is there a background noise? No, there isn't any background noise here. I mean, maybe it's something on your computer. I'm not sure. What noise is it? What's up, Mark? Your price? How are you doing? Okay, let's see. Love Amazon falling to a bottom trend line. Triangle pair looking to enter into the long-term shares. Yeah. Amazon is looking good at this point here, but remember that this could easily break out once again, like this happened in the past. So as I say, don't try to call these bottoms out. You know, it could bounce here, but it could go lower. And then if you take that expiry contract, you're gonna get yourself into a pickle. So yeah. Okay, what else? Only sound I hear is maybe that of a fan. A fan? What? Really? Like my computer fan? Nah, I don't hear anything. That's weird. I definitely don't hear any sound. Okay, Fubo. 45 calls, 319. 50 call, 419. Liking is falling in this wedge. One day looking at confirmation to break out. Ooh, Fubo has been in consolidation for a while. Yeah, I mean, I have an alert up here. I'm only going to take Fubo if it goes above this. 45, yeah, that seems fair. 50 calls for 419, yeah, that sounds fine too. Yeah. Definitely got to wait for a confirmation. T, what are your thoughts on Gush ETF on oil? Go read up on it before you take it. This is a levered ETF. As I say with all levered ETFs, be careful. You don't want to just take these things and not know what you're getting into. That's all I'm going to say. So read the prospectus, read what this is, read what it contains, and then make the investment. And I hope that you're not thinking of playing options on this, because it's super volatile. So be careful. That's all I'm going to say. Okay. Yeah, PC fan is possible, but I mean, my PC fan isn't making any noise right now, so I'm not really sure where the sound's coming from, if you hear any sound. Okay. Who is ready for the ARK breakdowns? I think I'll use like maybe 15, 20 minutes to do these. But before that, can we get one more round of people hitting the like button? There's 80, 90 of you guys, and I have only 36 likes. Why? Can we have more likes in the house so that we can go through the ARKs? The ARK. Noah's Ark. Can we get to 70 likes today? I wonder if we can. 70 likes is a very, very, very reasonable ask, isn't it? I feel like. I don't know. Maybe it is. Maybe it isn't. It would be nice if we could get to 70 likes. Come on, everybody. Take a second out of your day. Hit the like button. Make sure you subscribe if you haven't. We do this Monday, Wednesday, Friday. Purely educational stream. I try to make it as funny as possible. Maybe the next time you come in, I will rap. Somebody was asking me about it earlier. GS was saying, "Good morning. I swear, am I the only one who waits on T to start freestyling on these beats?" And I told him, maybe one day you will hear me rap. I have rapped on the stream before, by the way. I have. It was a very brief moment in time. Well, if you want to hear me rap, you got to get this up to like 100 likes. If you get it up to 100 likes, then yeah, I will definitely rap for sure. Okay, let's go through ARK. So, for many of you that don't know what ARK is, ARK Investments, and all that, you have come to the right place. This is a good live stream for you to attend because you're going to learn a lot today. Through me, based on what I have read and digested, and then I'm going to simplify it down for you so that you can take it into your beautiful mind in a more digestible manner. I know reading through all of this sometimes can be a lot of headache, and I'm going to explain it to you in a way that maybe is a little easier to digest. So the first thing that I want to go through is, or rather that I want to mention, is ARK Investments sets itself apart from majority of other financial managers through a variety of different principles. Okay, majority of Wall Street that sets up financial packages, this is what ARK does. They set up ETFs, right? ETFs, which are your exchange traded funds, right? And what are ETFs? They're basically like a basket, right? A basket with a bunch of different things inside, right? And you can buy this for a small bite-sized piece, right? They package everything, they buy a bunch of things, and then you can buy a piece of it. Okay, you can buy a piece of it. That's why we call it ETF. And then to purchase this thing, they charge you something called a expense ratio. Okay, there's a fund expense ratio for putting together the list of things. Okay, and how they justify that is by returns on the investments. Okay, so after doing my research about ARK, I'm actually very shocked that the market cap or the assets under management are so low. Personally, I think that the newer generation, Gen Z, Gen X, Gen whatever, Y, Gen What other gens are there? I don't know what other gens there are. C, A, whatever. I think that all of them are going to start taking up investments like this. Forward-looking investments that are slightly more riskier, that will allow them to gain, significant exposure to market returns. Now, if you have a younger person who's trying to start a portfolio, I think that this is a good spot to start in addition to buying existing ETFs such as SPY and QQQ. Okay, you can add these ETFs, the ones that I'm going to talk about today. Not both of them, but one of them. You can add ARKK, which is the Innovation ETF, because it kind of encapsulates not just one of the funds, but allows you to stream through multi-sectors. Okay, so here is what Kathy Woods has done, who is the CEO/CIO of Ark. How she has differentiated herself is by taking advantage of concentrating only on innovative approach. Okay, now I think that there are some merits that are really great in this, and then at the same time there are some downfalls which will lead to price variation over the long term. So there are benefits of investing in Ark, and then there are some, I don't want to say they're disadvantages, but I will explain to you what I'm seeing from my perspective so that you can understand it. Okay, they're not entirely disadvantages. What they are that you will eventually need to hold these investments through a rough storm. Okay, and I will definitely explain what I mean in a second. Do you hear it now? No, I don't. Yeah, I mean, maybe you can try to explain what you're hearing. Like, that would be so much more helpful. Like, instead of like, do you hear it now? Or, like, I don't know. I don't know what I'm supposed to hear, man. Okay, anyway, so Ark takes advantage of a couple of things. The first thing that I want to talk about is innovation, right? They really focus on innovative approach, which means to say they're forward-looking, they're looking at the secular trends of the future. First of all, you need to understand something. This is not a company that looks at things for 1 year or 2 years or 3 years, okay? Kathy is not looking at things for even a short period of time like this. If you're looking at a secular trend, you're looking 5 years plus. Okay, 5 years plus at least, because this is how long it takes for a trend to form, develop, mature. That's what we think about when we talk about secular trends. Okay, so when we talk about short-term horizon, versus long-term horizon, it's going to be really, really difficult for investors to stomach investing in Ark. Okay, so first of all, if you're thinking of being an Ark investor, make sure that you're not investing on a shorter time scale, because what happens then is you get disconnected with the investment philosophy. It's kind of like I know many of you are part of options community groups, right? And somebody calls out a trade. Oh, Tesla, $1,000 call for June 18. Okay, great. I think that what is important here is you're not following your own trade, so therefore your investment philosophy is not clear. But if you follow your own analysis, then suddenly this becomes clear that maybe you don't want to get into it. So the point I'm trying to make is don't follow somebody else's bets, okay, unless you're willing to follow them through the grave, all right, through the grave. So as you can see here, the market is easily distracted by short-term price movements, losing focus on long-term effect of disruptive technologies. We believe there is time arbitrage to take advantage of, and Ark seeks opportunities that offer growth over 3 to 5 years that the market ignores and underestimates. So I wholly agree with Renato Leggi here. I hope I pronounced his name right. This guy has a CFA and Kaya. Wow. I hope to one day have both of those accreditations. In other words, he knows his stuff. So as you can see here, early adopters often lose out if they sell very quickly, and main market versus the time itself, you can see that will always win out the total market. So that's the main focus that he's trying to bring here. And then another thing is the secondary market inefficiency, which is the siloization of Wall Street. How Wall Street compartmentalizes things into boxes, into like, little silos of things, whereas Kathy views the market as a big open market with tons of innovation, all part of the same block that are intermingling with one another, right? Energy mingles with machine learning mingles with robotics, robotics mingles with autonomous vehicles, blockchain does all kinds of stuff with all of this, and gene editing, and you get what my point is, right? Whereas like Wall Street concentrates on, we have the finance sector, we have the energy sector, we have this, and then they split them by market cap, and then they split them by the competitor landscape, right? So Ark doesn't do this. Ark says, let's look at things that are correlated with one another, and so this is what you need to learn from this this live stream. Okay, I'm trying to explain to you the idea of correlation, and then the variance between these correlations. Okay, so for example, autonomous vehicles are definitely linked to robotics, which are linked to machine learning, which is going to be linked to energy storage, and blockchain will probably end up being fit in there somehow in the future, right? And you will probably use, I think Tesla uses 3D printing for some of its parts, right? Okay, DNA sequencing probably not, but you can see that these are prevalent trends, right? And then DNA sequencing and gene editing go together, and molecular diagnostics go together as well. So you can see how these are part of the same bucket, and so they intermingle with one another, okay? And don't forget, machine learning also mingles with these over here. So Ark is building a fund, or they're building funds with lots of intermingling between their investments, okay? So today we're going to go through two of them. One is the ARKK, which is the innovative fund, and then ARKQ. This one is the autonomous technology and robotics ETF. But before that, let's have a look at your investment philosophy. Okay, it's very important to look at the investment philosophy, because if you're investing into something, you're now taking on the dreams and aspirations of that portfolio manager. Okay, it's kind of like when you go, if you are going to go and purchase something, right? You can't just say, tell me how it looks like, right? You have to actually look at it yourself. And you have to look at it from the lens of the portfolio manager, because if you don't, then what will happen is that you will never see eye to eye with your own investment. And when time comes where the market sells off, you will be the first person to sell because you do not know the reason why you bought something to begin with. So if your primary reason to invest in Ark is because everybody else is doing it, you should take a step back and assess what you're doing, because you need to understand that it is not what other people do, but it is what you understand about what you are doing that will make you this money in the long run, okay? And when the funds drop, which I'm telling you they will, okay? They will, guaranteed. I'm guaranteeing you that the Ark fund will drop, okay? Especially the ARKK one, right? Or even the others, they will drop in the future, okay? I'm guaranteeing you that when this fund drops, you will be the first person to sell if you do not know what you're doing, okay? Now, only smart people, or the people who have been following along with Kathy's investment thesis, her philosophy, etc., will know what to do when the fund drops, okay? And I'm going to go through that as well later. So innovation is the key to growth. They describe disruptive innovation, and they focus on significant cost declines, which increases demand. This is a very strong secular trend that's happening across the world. Okay, you have a lot of population increase. You have a lot of technology being used in making markets efficient, and this decreases the cost of certain production costs, manufacturing costs, cost of doing business, etc., etc. This increases demands for products, okay, which is an important thing. And then these innovations cut across sectors and geographies. So they are not defined within boxes. They are more, like for example, how I was explaining to you, machine learning talks to robotics, robotics talk to this, you get the point, right? So this is some of the investment focuses, right? And then they serve as platforms atop which additional innovations can be built. This is also another focus of theirs. So they use a top-down research and a bottom-up research. The bottom-up research is for valuation and portfolio risk management, and then the top-down is for idea generation and sizing opportunities. So they talk to different people, And what I like about Ark that really aligns with me, it's funny because people keep telling me that Kathy Woods aligns with the way that I talk about things. I've never known this before. But what I heard and I align with on Kathy is, she keeps knowledge very accessible, okay? She keeps it very accessible, and she disseminates knowledge very readily through webinars, through Twitter, through majority of different ways, and puts out the ideas and sees what the response is. And by seeing what the response is, she's able to get a good feedback loop of what works and what doesn't work. And this is very important. Many people think that by keeping what they know, they become better. But you guys know, ever since you have come to visit EGA, that this is the same principle that I operate by. If you know something, you should teach somebody else. Never, shy away from teaching people, because sharing knowledge is how you will gain knowledge. So that's one thing I like about Kathy, and I really do respect her for this. Fun fact, I did reach out to Ark as of yesterday. Let's see if we get a reply. I asked if we can possibly have Kathy on our webinar. Now, if it comes through, I don't know what I will do, but I will be very excited. But if it doesn't, then it is what it is. But there's no harm trying. So I did try to ask Ark if maybe a representative will come on to talk about the Ark funds, so that we can know more about them as well. So we'll see what happens. So this is their weekly schedule. You can see this is all on their website. And then the scoring process, open research ecosystem. This is what they use. Their analyst teams, portfolio management teams, and everybody works in an open space. It's a very nice process, to be honest. So you can see here, one of the key things are moats, barriers to entry. Okay, and this is one thing that I really like about the fact that they keep economic moats as a primary part of the investment thesis. Okay, and then regulatory risk, geopolitical risk, technology adoption, environmental, social risk, all very important. Average rate of return for the stock drops below 15% average over five years. Then they start investing. Product leadership, and then the company, the people, the culture, right? I'm actually very surprised that they consider this part like, okay, I'm not saying Musk is a very bad governor, but he's quite erratic as a leader. I'm surprised that Tesla passes this like with flying colors for them. For me personally, I mean, maybe they have a different view, but for me personally, I wouldn't, like, this would fail. For me, this would fail. Tesla would fail this criteria for me, just because of the leadership. And then execution-wise, which are also very, very important points here. So that's all. That's their investment process, okay? Obviously, they make it look easy, but it's not. Okay, it's a lot of things that they put into here. Okay. So one thing that I want to get out of the way right before I start talking about the individual funds. Remember one thing, okay? These funds, for example, the ARKK, which is the Innovation ETF, and this is as of Friday. Okay, this is as of Friday. This is where they stand with the position sizes and the weights. Okay, now if you look at the top, 20, okay, or maybe even the top 30, these companies are all extremely high beta stocks. Okay, they're high beta stocks, which means to say that they perform, their variances are pretty high compared to stock market performance. Tesla is their biggest position in this fund. Roku is the second biggest. Square is the third. Teladoc is the fourth. Okay, and they will increase or decrease positions based on market performance. One thing you need to know about the innovative ETFs or ARK ETFs in general are that these are actively managed ETFs. These are not passively managed. Therefore, Kathy and her team are constantly adding and taking out shares of companies within their portfolio. Okay? So therefore, you will see that this fund will have a certain performance criteria, which will mimic market conditions. But because the top 20 holdings, in my opinion, are very high beta stocks, you will see that these will bring down the portfolio abruptly during a event of a market correction. Okay, now during this time, it is now up to investors how they view the situation. The average investor, upon seeing the ARK fund come down, even to the 200 moving average here, would sell their investment. But a smart investor would add more of the fund here. Because if you are aligned with the thesis of investment, you should not change your investment criteria. In fact, you should add more positions if the stock comes down, right? It's kind of like your invest and hold mentality. If you're buying an ETF or a passive fund, you should invest and hold, hunker down, and add more to the position if the portfolio comes down, okay? So this is where majority of people will have a difference of opinion. And this is what will cause some investors to flee, some to stay. The ones that stay will be rewarded. The ones that add will be rewarded even more, and buy from the people who are panicking, okay? So a 5-year horizon, make sure that you stay in for 5 years and make a 5-year commitment. Don't be running away and then see 4 years of moderate growth, 1 year of loss, and then you are like, what the hell? So you cannot do that. You have to have the same alignment with the portfolio manager and the team in order to see those results. Okay. So ARKK on its own, this one is specifically the Innovation ETF. And let's just only talk about, the top, let's say, I don't know, 20 here, right? The top 20. So you have Tesla, no need to talk about this one. Roku, also a competitor disruptive in the space. Square, we spoke about Square a very long time ago, and this was a big disruptor because of Cash App. I mentioned this a couple of times during the live stream. Teladoc, we have gone through this on the live stream. We have done a valuation. It was undervalued, big upside. Baidu, we have done this on the live stream as well. It has also a big upside. Spotify, one of the disruptors, but also, expanding within its space with podcasts and whatnot. Zillow, right? You have your property kind of a group company. This is a good one as well. CRISPR, this is more biotech and, looking at genomics, right? NVTA, not sure what that is. Shopify, this is your, what Shopify is. PayPal, Exact, Tencent, this is your China diversified AI/gaming/ communications. Zoom, Twilio, Pure Storage, DocuSign, Taiwan Semiconductors, one of the biggest semiconductor producers in the world. Okay, so this is a very well diversified ETF across innovation. And then, of course, below this you have a lot more as well. Okay, you have your Novartis, which is your Israeli company that produces medicine and drugs. Other genomic companies, Huya, more Chinese companies, Morgan Stanley fund that they put in there. They do a bunch of Snapchats in here, right? They have a whole bunch of companies, okay? They own literally 2 million shares of Snapchat, okay? $153 million worth of Snapchat. Very small position, but still, I think you get what I mean. So there are 55 holdings in this company. In this ETF, not company. And it's a pretty diversified one, okay? So some facts about this ETF. First things first, ticker is ARKK. Expense ratio is 0.75. This is pretty high. It's a pretty high expense ratio. But if the growth rate warrants it, then why not? Okay. Fund AUM is 17.68 billion as of December 2020. I think it might be higher now. But I am actually very shocked that it's only 17 billion. I thought it would be much higher. But we will see. I think it will grow much higher this year. Okay. And then the median market cap of the companies are 11 billion. So they are mostly, mid to large cap. And then, yeah. So they focus on exposure to innovation, growth potential, tools for diversification. And then they're basically focused on actively managing this fund. Okay. If you invested $10,000 in 2015, you would be sitting on $70,000 right now. And it wants to aim to invest in deep disruptive innovation. That's the main thing here. Okay. So that's your ARKK. Okay. ARKK. Okay. Now the other one was ARKQ. This is your autonomous transportation, robotics, and automation, 3D printing, energy storage, and space exploration. Those are all the ones that form this fund. Okay. And I was reading this earlier, but there's a lot to read here. So this one has also a bunch of companies that look similar to the other. Okay. But this has only 49 companies. Okay. So here it's a little different. Tesla still a top holding here. They own a lot of Tesla. Baidu, JD, which is their Chinese e-commerce business. Trimble, Deere & Co, Teradyne, Kratos, Alphabet, which is your Google. Okay. So this also combines AI in here, by the way. Caterpillar, you have your robotics, right? That's considered robotics somewhat. TSM once again. NVIDIA, you're covering AI and covering chipsets, right? Robotics, whatever. Lockheed Martin, industrial company. Workhorse, disruptive within that space. You have Virgin Galactic, which is space. So they have a lot of different. NIO, this is an electric car maker that's similar to NIO, not to be confused with NIO. And then what else? Tencent, once again. Amazon, they have a small position in Amazon here. Well, not very small, but like $45 million worth of Amazon. Xilinx, which is going to be merging with AMD to produce chipsets. Alibaba, Apple, and then Splunk. Okay, so you get the drift. There's a lot of positions in here, and they're not overly relying on, specifically one or two things. Okay. So as Tesla continues to innovate and push boundaries forward, their biggest position here will probably generate the highest returns. But remember that when Tesla falls, then this portfolio will take a hit as well. So it will be up to the individual investor, to see whether this is a opportunity or a threat. Okay. Now, personally, for me, I like investing in Tesla at a certain price, right? So I would actually like to use the ARK fund as a proxy to invest into Tesla, because I don't want to. So here's another way to think about it. Say you don't want to take on so much risk by investing in Tesla. Well, I can just go buy ARKK. Now I have exposure to Tesla, and also I have exposure to other innovative companies and stuff like that. So this can be a good proxy to get into Tesla as well. Okay, this is one of the things that you can trade now. Investing and buying and holding the fund for a longer period of time makes perfect sense. Okay, and I think that this fund will continue to go up and perform well, outperform the S&P 500 in the years to come. What is important though is make sure that you do not take this when it's overextended. Okay, do not take it when it's overextended. So you can see that there are very defining times when it comes to dip on the 200 moving average, and that's good times to buy. This one of them was approaching, and you might actually get this possibility here now that we are here. Okay, so that's mostly what we need to cover here. So ARKQ, this one also, by the way, all their ETFs are a 0.75 expense ratio, and this one is only 1 billion in AUM, so assets under management. Okay, Foresight Fund Services, this is their broker dealer, and number of holdings are 45, I believe. It was 45. This one, if you invested 10,000, you would be sitting on 40,000. It was a 4x return. Okay, and you can find more information about this on the website here as well. I will go through more of this on Wednesday for you guys. But yeah, this is a good summary, or a good kind of a introduction to what ARK does. On Wednesday, I will go through another two funds, and I will also go through their yearly report to see how these funds are, priced in the market. Okay. Well, we can't do a valuation on the ETF, but because the ETF is the value itself, but just to understand where they are sitting in terms of historical pricing, and go through that as well. Did you guys find that interesting, or did you find it helpful in any way to understand ARK? Because I was hoping that I would be able to summarize it for you guys in a apt manner. Kathy seems like a really smart lady, though. Honestly, I would put my money with her. She does seem very assertive with the way that she does things, and I think that she may be a good leader for us younger people. Okay. Let me answer some of these questions. DNN. You know, we saw a lot of flow on this, but I'm not even gonna bother. It's like looks like a pump and dump. $800 million market cap. Like, if you're not investing in this for a specific reason and you're following something, I don't recommend it. It looks very sheepish to me. I mean, I do like miners right now, but then I don't know why I wouldn't buy this here. That's all I'm saying. It's just a bit weird. The price action is a bit weird. I don't like these kinds of movements. Like, if you've been on this live stream long enough, you know I don't like these. It literally looks like GameStop, if you think about it. What do you think will be the bottom for BABA? I think the what do you mean the bottom? It's been on an uptrend. BABA has been on an uptrend. Yeah, it's been on a solid uptrend. You mean the bottom, like a bottom? I mean, this seems like a good time to add some shares if you're looking long term. If you're looking short term price action, it's not really possible to tell when the bottom will be till the market bottoms out, right? So we can't really tell where the bottom will be with BABA right now. Short term, I mean, this looks like a good, to be honest, this looks like a good spot to add some to your position. The next spot is like 250s, 252, but I wouldn't fight for that extra, like the additional $5, you know what I mean? Make sure that you're taking far expiries or buying stock outright, because this is not something you want to buy like a short term kind of thing on. Let's see. Thoughts on BFT consolidating triangle merger expected for first half of 2021. Thinking March 18 CR for 1620 call. BFT acquisition group. It's a SPAC. Oh wow, 3 billion valuation. What are they planning to do again? What are they? I gotta do more research about this to give you a apt, like, with SPACs you gotta do some research, man. Like, I mean, price action wise, technical analysis wise, it's on an uptrend if that's what you're asking me, but I don't know nuts about this SPAC to help you understand like the fundamentals behind it. Merger expected first half of 2021. Okay, makes sense. Thinking March 18th or for $1620. I would go with the further expiration to buy yourself more time. That's what I would do. Steady, low volume, constant background. That comes out like a fan. It comes out when you're quiet. Okay, well, my computer has a fan, so I'm sorry that the sound comes out. Maybe if I put on this pop filter, maybe it'll help. Tell me if... is it better now? I don't know. Let me know. I took the pop filter out so you guys can hear me better. Let's see. Okay. Thanks for the breakdown of ARKK and ARKQ. No problem at all. That was great. Thank you. I'm mean short-term action. Okay. Jumia has been consolidating for a while. Looks right for some upward movement. What do you think? Yeah, maybe. But I wouldn't try to catch it. Wait for the confirmation. Wait for that two-wave confirmation to the upside. This is still in the downtrend right now. I made that mistake last week. Don't be like me. I tried to catch it to the upside to $70 on this break here, but I kind of took it at the wrong time and then ended up playing a lotto instead. So wait for the two-wave confirmation above this dual zone here at $58. Break above, consolidation, higher highs. This can be your entry right here with Jumia. Entered 270 2 weeks ago. It was Friday and it hit me hard. That's why. You entered 270s on BABA for what expiries? That's the main question. Very interesting and helpful. Thank you, Juliana. Are you worried about possible bubble burst strong correction? No, I'm not. This is a very nominal correction on the S&P 500 and market in general. In terms of bubble bursting, I'm prepared for it. I'm always prepared for all scenarios. My portfolio is completely hedged. I have puts to the downside, QQQ puts, I have SPY calls, I have bonds, I have the VIX, I have everything prepared in case something goes wrong. This is how I operate. I make sure that there's no room for error. My portfolio management is always going to take into account every scenario, so that net I will still be up year to date, and have the best of all the deals. So overall, we're still profiting, and at the same time hedging our positions and making sure that our portfolio has a good upside and downside. And by the end of sometime next month, this portfolio will be up about 40%, I think. So yeah, you gotta be prepared for every condition, Renes. What do you think of NEPT? I entered a share and call position on Thursday. It looks like a solid play. Okay. Could you maybe give me a little bit more information? Oh, no, definitely not a solid play. Definitely pump and dump. Looking really weird. I would not play this at all. I'm sorry. $200 million market cap. And then on top of that, the share price goes like this. Worse than GameStop. This is worse than GameStop. I'm sorry, but I will not play this kind of a market cap in this. Just discovered your channel IG page. Thank you for all the info. No problem, man. Absolutely, no problem at all. Okay, thanks, TY. No problem, Miss Tommy. Let's see. Are you familiar at all with the Riot? Yes, I am familiar with Riot, but I don't trade it. Sold off pretty hard, along with Bitcoin today. So be careful. Bitcoin is down 12%. And this, guys, is the reason why I don't trade cryptocurrencies, FYI. Okay. Do you see what just happened? Look at this. From what? From, okay, let's just look at this really quickly. I wasn't looking, but look at what just happened. From $58,000 to $45,000, okay, in a matter of couple of hours. Okay, I'm talking literally less than 6 hours. If any asset that you own is capable of doing this, I don't know why you would buy it. I do not know. Okay, I do not know. I simply cannot wrap my head around it. Why would you take on this kind of risk? It baffles me. But I mean, to each their own. If you like the high risk investments like this, please go for it. And I can guarantee you that this will go from here to 60,000 by tomorrow. That's how irrational this cryptocurrency market is. Okay, and so this is the reason why I do not touch cryptocurrencies. Okay, and Riot, as you were asking me, as a response to this, is down 14% because it also is, in this entire market. So that's gonna be definitely something that you have to take note. I didn't even realize that Bitcoin just went from freaking. That was crazy. That's insane. I don't know. Yeah, I wouldn't trade it. Anyway, guys, 1 minute to market opens. I got to get on the team on Discord to do the live trading session. For those that want to join me through the live trading sessions, you can go to our website, learncompoundgrow.com. Sign up to be a part of the EGA Tribe Discord community. Click on the EGA Discord. Click on EGA Discord right here. You can sign up for our Discord community where you watch me live every single day trading, and you can, understand what, why, how, when I get into things, and follow along. Other than that, I'll see you guys on Wednesday. Thank you guys very much for tuning in. Appreciate you guys very much. Have a great trading day. Great rest of your week until Wednesday, and I will see you soon. Take care, guys, and love you all. Peace. Bye-bye.